Hi, welcome to Chapter 10, Hospitality Accounting. Today we're going to talk about hotel accounting and financial analysis. So for a hotel, you can have either internal or external reports. Some hotels are going to be listed on a stock exchange, such as the New York Stock Exchange or the NASDAQ, and they are required by law to file reports with the Securities and Exchange Commission, and these are external reports. These are same reports that would be made available to shareholders and that creditors would request. So those are some examples of external reports. Internal reports are generated to help management do good analysis, make good decisions, and these reports are not public documents. They provide a great level of detail about the operations of the business, and they are usually very proprietary, so that you wouldn't want to show that to your competitors. You know, that you wouldn't want to give them that information about how your business operates, but it's very useful and necessary for those inside your business to make good decisions. Revenue and support centers are going to be used quite a bit in these internal documents. A revenue center are departments that generate sales for the hotel. A large hotel may have several revenue centers. A smaller hotel may only have one revenue center, which would be room sales, but a larger hotel may have several revenue centers, maybe one for catering and events, one for rooms, may have one for casinos, so it depends on how large the hotel is. Departments that produce no revenue but provide services to the revenue centers are called support centers. So again, some common revenue centers are rooms, food and beverage, rentals. You may also see other departments, other operated departments, and generally in other operated departments you're going to include laundry, parking fees, and other service fees. So anything that the hotel can charge the customer a small fee for are going to all be lumped in these other operated departments. Departmental expense corresponds to a revenue department. These are direct expenses that are identifiable and can be associated with a specific department. So if it was room rentals, anything that had to do with the cost of renting a room, having your maid service, your cleaning service, fixing and cleaning maintenance to the rooms, those would all be direct identifiable associated with a specific department. Undistributed operating expenses are for reports expenses of the service center specifically. So here we're talking about administrative and general expenses. That would include administrative and general salaries, property operation and maintenance. So it's anything that is needed to operate your property and maintain your property. That would include all of your landscaping and that type of item. Sales and marketing and utilities. Again, utilities would be electric, gas, all that type of thing, phone, internet, anything that is a utility for your home would also be a utility for a hotel. The next category we talk about are fixed charges. Fixed charges are also called fixed costs, and they include rent, property and other taxes, insurance. They do not include depreciation or interest expense, even though these are kind of a fixed charge, but they go into a different center. We have some ratios again for operating a hotel, same as we did in the last chapter for restaurants. A very popular one is average room rate, ARR, is the average selling price of all rooms that are occupied. So this doesn't include rooms that are not sold or not occupied, but you take the room's revenue and divide it by paid rooms occupied, and you'll get the average room rate. And oftentimes you're going to have different rooms being sold at different prices, so this will give you your average room rate. Next you have occupancy percentage that compares paid room to total rooms available. So how are you doing? Are you keeping all of your rooms occupied? Empty rooms means no sales. So you're going to divide paid rooms occupied by rooms available and multiply it by 100. If you don't multiply it by 100, it'll look very strange, and then you'll get the occupancy percentage. And really that's very important for hotels. They want to keep those rooms rented. Next they have average food check, which shows how much the guest is spending on food. So you take food revenue divided by number of customers. Usually in a hotel setting, the food is marked up a great deal. So this food revenue can be a good source of revenue for the hotel. It has a large profit margin, probably larger than your average hotel, because you're paying for that convenience of having the food right there and room service. Anyone who's ever ordered room service can tell you they're going to charge you $6 for a muffin. So food revenue can really contribute to the bottom line. We have some cost percentages here, and these ratios compare the cost of a particular item to the total revenue for that item. So we have 3 different examples. We have food sales, beverage sales, and payroll. And they're going to take the total food cost and compare it to the food revenue and get the food cost percentage. The higher your cost, the lower the money you're going to make and be able to keep in your pocket. So you want to keep these food costs and beverage costs down as low as you possibly can so that you can make money. The last one is payroll and related cost, and compare that to revenue. So what is your labor cost? How much out of the money you're bringing in are you paying to your workers, your laborers? And thinking about a hotel, that may be pretty significant as you have quite a few people. Concierge, front desk, all of the cleaning staff. So that may be significant. You want to make sure that you keep an eye on that. Next, I want to have a word about hotels with casinos. Casinos are growing. More and more states are allowing casinos, and casinos that are part of a hotel will have its own revenue and cost center. You can kind of take your mind and think about Vegas, and most of those hotels have large casinos in them. In fact, the casino is a more important revenue center generally than the room sales. So gaming revenue is the difference between gaming wins and losses, is not the total amount wagered. So they could take, if you win some, you lose some. They have that all figured in to gaming revenue. And then complimentary allowances is the retail value of free goods and services given to the guests. In many gaming situations, drinks are comped. You can get free drinks when you're gambling. In some situations, you'll get a free room. If you're a big gambler, you may get a reduced room if you're a smaller gambler. And these complimentary allowances need to be reduced off the revenue that you're bringing in, and they do it at the retail value. So that was short for Chapter 7, but thanks for watching. Please be sure to read Chapter 7. There's a great deal of information, and there's a great deal of pictures there about the different cost centers and revenue centers so that you can get a good look at it. It's hard to replicate in PowerPoint, so make sure you look at that. Thanks, and I look forward to seeing you in WINBA.